How markets in Europe have ended the trading session, because the FTSE 100 in London, well, it's shaken off a three-day losing streak. Why? Well, Russia said it would pull its troops back from near the Ukrainian border, and many investors have taken that to mean that the confrontation between Moscow and Kiev is perhaps a little bit less likely. And of course, anything that ratchets down that tension is likely to be seen as an opportunity to make a little bit of profit, perhaps on bets that shares will fall. They're called shorts, and maybe do a little bit more bargain hunting amongst the cheaper stocks. So this is how the FTSE closed at the end of the day, up 1%. But it's worth noting that the volume of trade or activity in the stock market is only about a quarter of the average over the last 3 months. Perhaps not surprising for a soggy Monday in the middle of August. Let's move on up, because we've got Royal Bank of Scotland coming up next, and their shares down 1.7% at the end of the day. It confirmed that it's thinking about selling the international arm of its private bank called Coutts. It's better known as the banker to the Queen. There are thoughts that perhaps it wants to focus more on domestic lending, and any sale of Coutts could actually net this bank, Royal Bank of Scotland, about £500 million. It'd be good for the taxpayers who own a big chunk of that bank. And Balfour Beatty shares up more than 2% today. It's thrown out a second merger proposal from its rival Carillion. Balfour insists that it has an independent future. Now, that is despite its profits slumping by more than half today for the first half of the year. Well, Balfour Beatty is scaling back its geographical footprint to focus a little bit more on the US and the UK. So let's talk about this stock and many more with Naeem Aslam, who's the Chief Market Analyst at AvaTrade. Good afternoon to you, Naeem. Let's start with Balfour Beatty. We've got it on the board. Shares rising today. Is that an indication that perhaps traders think that they're better off without Carillion?
Thanks for having me, Victoria. Yes, I completely agree. I think usually in a normal case, when a merger like this, fall out, you will see a massive kind of a red print all over the screen. But today we have a green, and then this is despite the fact that the earnings for Balfour Beatty was disappointing and very appalling kind of results. The company has pulled 10 billion last year, and this year it's not pulling that kind of a revenue, given that we have a very strong recovery in the UK when it comes to bricks and mortar, which is the main primary business for Balfour Beatty.
Well, it's interesting you say that. We've got the FTSE 100 on the board. Shares up, the index, up 1% at the end of the day. This obviously in contrast to what was going on last week. How long do you think this sort of optimism that we're seeing on the board is going to last?
Victoria, I'm not going to start clapping about this news, about this little bit of a gain today, because, yes, there is no data today at all, and then only a gain for today is not something which is going to pan out for the rest of the week. Because if you look at the VIX, which is the volatility index for the entire market, it has actually, traded near its 200-day moving average, and it is still quite elevated in that level. And the S&P 500 in general and the FTSE, only 20% of stocks are still trading above the 200-day moving average, which is a kind of a standard for all the institutional investors to come and then buy the stock. So today's gain is not something particularly very mirror what's going on in there, because tomorrow, if we get any kind of a news from Russia or Ukraine or any other geopolitical tensions, you will see the market sell off very, very rapidly.
Now, one thing that many traders are going to be looking for this week is Wednesday, and Wednesday is, of course, the inflation report from the Bank of England, and also we heard the latest on jobs. How are those likely to move the markets?
I think what we are talking about there is a road to interest rates, and then Mark Carney is going to look at the wage, unemployment, and both these numbers very, very carefully. The irony is that, the unemployment rate is at 2008 low, and the wage growth is at all-times low. Now the question really stands is that what kind of a recovery do we have? Do we have a slack in the economy, or is that kind of a structural problem? Because if the unemployment is at its record low, wage growth should start picking up. And that is the question that Mark Carney has to resolve and then answer to the question before he gets onto the road to the interest rates. And that is very, very important for him to look at it.
It is indeed. When will wages start to grow once more? Thank you very much, Naeem. Now let's check in with the markets across the pond in the US, see what's going on. Well, so